Hello and welcome. You tune into Commodity Central. I'm Ankita Saxena, and let's take stock of how the crude and the precious metals are faring first before we get on to our discussion. Well, oil prices held steady, after the positive talks between US and Iran. We did see a tad bit of a tick down that Brent crude was seeing, as Iran has reached a general agreement with the US. But as of now, if I look at the oil, it does seem to come off, the lows, and it has seen some bit of a buying coming in, 0.2% gains that's coming in right now on Brent crude, even though it is still below the $68 a barrel. 67.56 is where Brent stands at, and WTI stands at $62.45 a barrel. So slight bit of a tick up that's coming in after oil steady after the talks between US and Iran. But let's talk about the precious metals also and how gold and silver are faring. Well, gold was little changed after a two-day decline, with many Asian markets offline for the Lunar New Year holiday. In fact, the bullion was near $4,880 an ounce in the early trading, having lost more than 3% over the previous two sessions, as the dollar was also strong. But as of now, from that loss, we do see some buying that's coming in gold and silver also, from its 1 week low, as investors are really looking ahead to the FOMC minutes. Gold has ticked up 1%, so it's right now at $4,954.8 an ounce, and silver is up actually almost 3% right now, sitting at $75.70 an ounce. So that's where silver is at. So as of now, we do see some bit of a buying coming in gold and silver as well. So that's where the precious metals stand. But let's talk about the energy sector and the power sector. Well, India has hit a record power capacity addition in FY26. In fact, if you look at the numbers, we have added almost 52,537 megawatts of power capacity, and this is the highest ever capacity addition in a single year. Now, remember, the government had given a target of almost 500 gigawatts of non-fossil fuel-based energy capacity by 2030. Well, are we really on track for that, or are we ahead of time? And what's the roadmap ahead? To weigh in on that, we are now joined by Sumit Kishore, who is the Executive Director, Axis Capital, joining us. Hi, Sumit. Good afternoon, and thank you so much for joining us.
Good afternoon, Ankita. Thanks for having me on the show. On your specific question, I think when a few years back...
Yeah, Sumit, I'll just come to you with the question. So my question is, India is targeting 500 gigawatts of non-fossil fuel-based energy capacity by 2030. Currently, we stand at 263 gigawatts. Do you believe that we are on track to achieving this target that the government has set, or are we much ahead of the timeline, and what drivers will ensure this?
Okay, I sort of anticipated this question, Ankita, but let me go ahead. A few years back, when this target of 500 gigawatt was first given, there were a lot of disbelievers. But as you pointed out, fiscal year to date, the country has added 52 gigawatt of capacity. As of Jan end, the country's installed capacity is 521 gigawatt, of which the non-fossil capacity is 272 gigawatt. So in the 52 gigawatt that we have added so far this fiscal, almost 35 gigawatt is solar and about 4.6 gigawatt is wind. So if you go by the run rate we are tracking right now, getting from 272 gigs to 500 gigawatt by 2030 in 4.9 years exactly from now means that we have to clock somewhere close to 46 gigawatt per annum. Are we on track to do 46 gigawatt per annum this year? I think very much. On the renewable side, I mean. So we just have to continue at the same pace, and we would be very close to 500 gigawatt by 2030.
Since you mentioned the renewable space, Sumit, let me ask you at this point of time, are there any policy gaps that could potentially hamper the progress in the renewable space?
See, I think the biggest problem or the enabler that needs to be sorted is power demand. So the basic enabler is power demand. Power demand growth has been a 5% CAGR over the last 2 decades in India. It grew at a very frenetic pace post-COVID for 3 years, but last 18 months have been rather disappointing. So fiscal year to date, power demand growth in India is less than 1%. It increased momentarily in December and the first 20 days of January, but post 21st of January, power demand growth in India is once again sub 1%. So you can't have power capacity addition if power demand doesn't grow. But like our Access economist Neelkant Mishra is quite confident that India will keep growing at 7%. For that can't happen without power demand growth happening. So I think the key fulcrum to the sector growing is power demand. It needs to come back, and the low base makes us confident that at least we should have 6% power demand growth 12 months forward. In terms of policy, I think we have had a very solar heavy capacity addition in the last 12 months. And when this was combined with weak power demand and slow ramp up of transmission evacuation capacity, this has caused curtailment in select areas like Rajasthan and Gujarat, which are very heavy on our capacity addition. So I think the focus is shifting more towards battery storage along with solar and wind, and that is going to be the way ahead. In terms of policy, I think the bigger policy question that we are waiting an answer to is the passage of the Electricity Amendment Bill, which is likely to happen now in the monsoon session. It was earlier supposed to happen in the budget session. And once discoms in the country have cost-reflective tariffs, I think there would be a positive chain reaction of positivity for the sector, starting from the discoms all the way up to upstream, including renewables.
Okay, Sumit, one final question before we wrap up this discussion. There are several budget announcements that revolve around the basic custom duty exemptions in favor of solar energy industry, for example, sodium antimonate and lithium ion cells. What kind of incremental benefits will play out for the renewable energy focused companies?
Ankita, the word you used, incremental, is the right word, because I think the big picture does not change for the sector. There is a party going on for solar module manufacturers in the country, especially those that have manufacturing capacity for solar cells right now. So basically, solar cell capacity is in shortage, and you are going to have implementation of the approved list of module manufacturers where it will mandate cell manufacturing in India to basically compete for government awarded contracts. And the party will continue, I think, for the next couple of years till India manages to have a local supply which is sufficient to meet the demand on cells. So that is still a couple of years away.
Right. Sumit, on that note, we're completely timed out in this discussion, but it was a pleasure to have you on the show. Thank you so much for joining us.
Thank you.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. On the other side, lots more on the market. Stay tuned.